Hey traders, Nick Shaheen here looking at Sarepta. I don't know much about it fundamentally, so it's going to be discussion about charts. And you'll see it'll make sense. I know people say, well, why are you doing a video on it? Because a chart is a chart is a chart, and I proved it several times. Go check out the Novavax video I did last week, um, which wasn't the first. So anyway, charts matter because if you believe that machines are doing most of the trading, statistics show that it's over 80% of it, then how could you not look at charts? Machines don't do homework. They just trade code, and the code uses math, relationships, extensions, everything you hear that you want to plug your ears when you hear it. It's all in play because machines understand numbers, zeros and ones, two numbers. That's it, on, off, and they make a set of decisions off of it. So don't know what the heck was that, cut in half over whatever headline. So what do? It's easy in hindsight to say I should have done this and should have done that. So let's see if we can learn a lesson from it for somebody that was long and didn't get out, or they didn't see it coming, or should I buy the dip or not? The idea is I need more information. This is a daily chart with about a year's worth of comments. I'm reading a comment from the chat room. Years worth of data. So not enough because I only have one poke below, which is fine. So just from this, if I'm not allowed to zoom out, I would say, you know what? This was the base of the whole rally. So I'm just basing it on these 12 months. This is the base of the rally, so I shouldn't panic out of it. Let's see what happens tomorrow. Rarely do I see candles like these be one-day events. So you got to think there's going to be 3 days, what they say on Wall Street, which I'm not one. I'm an engineer who learned this on my own. So they say that you need 3 days to cover, like if somebody had a blowout, they have 3 days for margin calls to bring money. So they might sell more in order to close a position. I don't know, whatever. It's a big event. So let's go 1 week and expand. All right, so now it becomes clearer that this is definitely a base from which not to panic out if somebody's still long. Another part is that this is an area that has been a problem before. Once, twice, three, four, you can argue 5, 6. So you've been in high altitudes already. If somebody rallied from here or here or here and didn't book any profits up here, they need to pay attention to charts, because even if you still love it, the way to do it is you book some, you sell covered calls, you do something in order to hedge your bet. That's what I would do in this position. It looks like a breakout, but it's good idea when markets are at all-time highs. We got all kinds of crap flying out in the air. COVID still completely on the loose. Politicians not making it easy. Why wouldn't you guard and book some? So it just makes sense. The chart says you should have anyway, regardless of news. And just like it says here, right here, if I haven't sold, and me capitulating down here is most likely wrong. I have proven support, and a chunk of it, and a breakout. This was the base in 2018. They tested it once, twice, 3 times. This is the 4th. So it is actually proven support. I bet you anything, if I expand one more time, we'll get more information from this one. Let me see here. I go to a monthly chart. Boom. All right. So now I'm going to be critical of people who did not book here. You also had one in the 2000.com bubble. So this whole area is nosebleeds for this chart. Any which way you slice it. I don't care how much you like the fundamentals. The machines will trade it. So if you're owning it for 10 years, fine. But if you're owning it for less than 1 year or within 1 to 2 years, that is a significant altitude up here. From history, I'm not making this stuff up. But I also get another confirmation of this zone being not a place to panic out, because it also was a play in 2002. And it's just above this neckline, and this is a huge neckline area. So anything above 70 is supportive. So is today the bottom? I don't know. But if you withstood the 50% drop, waiting out $10 doesn't seem like a big deal in my opinion. But that's just me. So if market's correct, that's going to add to the problem of the stock, and it meanders down towards 70. So what I like to do is on big down days like these, if I know the company and I want to buy it, I would rather sell puts and sell them around 50 if they're available. I don't know. I don't trade Sarepta. Or 60, that's a significant top right there, so that might be a place to do it. Because the puts are on fire when the stock drops 50%. I'm going to go check, actually, I got curious. I'm afraid to go check the stream in the chat room. They're busy. Okay, so I did check. It's not very liquid with the options, but they're there. So if I wanted to own the shares and I want to create a buffer, I can sell next year's leaps. This way, it's boring trade where I don't have to watch it every day. If I don't mind owning them at $50, I can collect significant premium for selling a put down there. What does that mean? If I sell one put down there, let's say the number is 5, ends up filling at, I get paid $5, probably more, $6 to promise somebody something. As soon as I sell it, I get on the hook. Because I'm promising something. So I am forced, I am obligated, I don't have the choice, I am obligated to buy the shares. So if I sell one put, I'm saying to somebody out there, hey, I know you own shares. Would you like a guarantee that I will buy them at 50? Sure, yeah, I would love to sleep knowing that that's the case. Okay, so they'll give you 500, 600 bucks today for that promise. So if at any point in time they decide to give you the shares at 50, and by the way, they can do it at any point in time. I don't know why they would do it when it's above 50, but they can. So you wake up, I would wake up, and I would find 100 shares at $50. And if the stock opens above 50, I'm instantly winning. If and they're out of the picture, the stock is mine, and the position of sold put is gone. The 500, 600 I collected is mine. So that is a buffer. So if the stock falls a little bit and I lose 600 bucks, I have $6 worth of protection. So it can go to 44 and still break even. Now, I'm using these numbers. I don't know what it's going to fill at or anything. So this is just me taking a peek quickly at the premiums out to a leap. So that is how that thing works. And, selling puts when I don't want to own shares just to try to make money in a stock this violent is definitely not something I should do. If I don't want to own the shares, I would sell a put spread and collect $1.50 for a risk, a set amount of risk. Where if it goes to zero, I know that that's all I can lose, 800 bucks or 1,000 or 3,000, whatever it is. Versus I'm on the hook from 50 on to zero. Okay, so this is the idea of selling a put, or selling a put spread, which is also called bull put spread. They're all bullish, but it's misleading because you don't need a rally to actually profit. In fact, the stock can fall another 40% and still be okay. So that's the idea of why I like on bad days like this to sell into the fear if I know what's going on. So I would go get educated on why it's down 50% to know if I'm comfortable owning these shares lower. And if that would be step one. This way it can take its time the next couple of days into stabilizing. And if it does and it rallies, I'm not out of the boat. I'm already on the boat. All I have to do is add, if I wanted to buy shares or calls, I'm already green. All right. Hopefully that helps somebody out there. If nothing else, just from the perspective of what is a put? Option put. It's protection for somebody else. And by selling it, I'm being the insurance company. So I'm being a micro market maker, a tiny one. If I sell one put, I'm guaranteeing somebody out there some insurance. Or if somebody's trying to short that stock, hopefully I'm selling them a losing lottery ticket. If somebody thinks it's going to 50, therefore they want to buy the $50 put to short the stock, then I'll be happy to sell them the $50 put lotto ticket that's going to lose. That type of thing. There's always a buyer on the other end. You're never buying shares or buying options or selling shares or selling options. You're never buying them off the shelf and putting them on the shelf. It's a fight. You think they're idiots. They think you're an idiot. So who's smarter? Only time will tell. Nick signing out.